guys, and glad to have you on board again. Today we're going to make a quick intra-week update as we're pretty much halfway through it. Yesterday has been a rough day for Bitcoin, even though we're going to study technicals and it hasn't been that hell of a drop. Actually, some interesting signals might have popped up and we'll talk about that later. First of all, just a quick update on the stock market, just because a lot of people have somehow forgot about it, and now that the volatility is dropping into the crypto market, it feels like the gambler's attention is rolling right back to the stock market, not to mention the Wall Street bets, stuff like that. So this is definitely something that we need to bear in mind, because I've made it clear we're no longer making weekly updates on the stock market until we have something to truly talk about, something that hasn't been said already. So let's just give it a second for reminding it to you guys. Okay, the stock market isn't dead. It just looks like it is. The volatility has dried out, but there are lots of things happening inside the stock indices. So in a broad-based reading, nothing shows up, but there's definitely still a lot to happen. What does that mean? That means we've said that if we didn't have any significant drawdown superior or at least equal to 10%, after May's sell in May, whatever stuff we were talking about back then, we would eventually switch into a very dangerous mode in which the market will dry out of liquidity to just burst it all out, just like we did previous years ago. It's paid several times, actually. I mean, this is the kind of market that went totally out of control. Bam, everyone was just like, well, it's no point selling, market will go up. Well, they did not. Just like these points, market will go up, stop selling, bang, then violently come afterwards. We do have lots of negative feedbacks from the current pricings. So the thing is that professionals still know, and I am still with the same old things, I expect volatility to show up once again like these patterns triggered in the past. My personal assumption is that we can retrace at least to 2019 or 2020 high points, or the open price for 2020. So it gives us a big area in which I think price can be sustainably enough, but in the midterm. But that's the area in which you can buy, which means today you cannot buy at all. So don't buy, don't be dumb enough to buy. That doesn't mean you can sell, it just means you have to settle in between. All right, how do you translate that into real world actions? That means that if you haven't bought the lows, you can't do it now. You just have to wait. Okay, if you bought the lows, then you let it happen. You partial profit take, of course, but you sure as shit let those trades going on. Okay, until then, the only thing you can do in both case scenario is to have some spared cash ready for a potential fast and violent drop. Just be aware of the fact that if it drops, expect it to be as dumbly volatile as it has been multiple times in the past. Huge and harsh drops in valuations, people panicking, whatever, the sentiment will be at its worst, and you will have a lot of reasons not to press the buy buttons, but you need to have a plan and to put it into motion if it ever shows up. Okay, so buying at least into this moving average or below is the minimum requirements to get into active trading. I think this could be in a widened area perspective if we ever get a huge blow off of volatility, which I still tend to believe is very less likely going to show up. But I also still believe that what we've had in the crypto market, this kind of crash, whatever, is just preceding what's coming for Wall Street. There always has been kind of a correlation in between, and I think that we're now playing with time, but I don't nearly think that we're actually not going to see stock market drawdowns just like we did for cryptos. Okay, it has been a hell of a volatile stuff for cryptos, so expect it to be dumbly as volatile for stock market when the time comes. The actual question is also, you cannot anticipate. You can't short that by anticipation. So spare some cash. Have a list of assets you want to jump in. If for some reason people were dropping them at stupid prices, you'll be there to catch. But just don't be dumb enough to buy shitty assets, okay? Don't do the same old alt stuff you've been boasting for with cryptocurrencies. Buy good shares. Don't buy the shitty things that worth pennies and stuff like that because you expect you can make 50 folds or something, okay? Really buy into good stuff. But don't buy into the top 5, okay? Don't buy the FANG stocks. These just can't be bought. Way too dangerous. Okay, now cryptocurrencies. Like I stated, yesterday's been a rough path for Bitcoin, even though today we're already starting bullish engulfing the pattern, which could trigger some kind of a morning star pattern, still out of the same supportive area. And just to recall it to you guys, we have two sets of separate patterns that can trigger a second range boundary rebounds. The first one is to buy the volume. The second one is to try looking for very low volume demanded areas in which we will find rebounds out of bears exhaustions. Okay, so option A is we will already be there. Option B is we could drop an additional 15% to get to an exhaustion pattern in which final liquidation or whatever could be at play. In the meantime, that was for us the assessment that we had no reliable signal to orientate one way rather than the other, so I wanted you guys to stand still and do nothing. Yesterday has triggered a signal, the candle's closed, and that is an oversold taking profit pattern, which means we're oversold on a support with a bullish trend going on multiple time frames still. So I still think that we have reasonable probability to build the second range boundary right here, right now. Okay, that doesn't mean this is just an all-in type of game, because of course, now that we have a momentum signal, we have cycle alignment and all of these stuff, we need to see the bulls taking over the momentum and breaking these bearish trend lines. Okay, trade line, but they act like a trend line now. As you can see, we've got these low points, severely much lower low points in before. This is not the tape now. Okay, we're neutralizing momentum. I'd like to see the bulls taking over the bearish pressure. That doesn't mean the bulls will control price anytime soon. The bullish trade line is not even visible yet, so the bulls doesn't have control about prices. It's more like the bears are wasting time and losing energy up onto the supportive areas. That's what I'd like to see. The bears releasing their pressure, just like the bulls will slowly afterwards eventually take it over. Okay, so that means we have a daily signal. No, now I'm diving into expert stuff. Okay, we had to study, because if we have a reversal, we need to have a structure. We need to have a pattern that will give us the risk limitation and tells us where to put the stop losses. So we generally, as experts do, scroll 2 time frames below an H1 time frame, and we need to figure out a pattern that suits the potential reverse. Okay, the only pattern we have out there is the fact that we had a delayed third range boundary into that ugly fat triangle that terminated itself into a squeezing pattern, which means this is what we were dealing with. Okay, this ugly fat triangle that we've managed to break below, okay, that we try to break, okay, and so on. But as you can see, no cycle breakouts. This is definitely not a bearish breakdown. I've seen so many dumb traders in YouTube or whatever calling for the breakdown of this triangle. So let me be real clear. This is dumbass trading comment. This is just as silly as it is. Of course, we had a triangle, but first of all, it is not a normal triangle. It is a low volatile triangle, and that's fairly much more different than people thought it would. Then I've seen the usual bullshit in which, well, a triangle preceded by a downside move has 70% chances to go down to the opposite direction and to double down on the triangle's amplitude. So in that perspective, well, of course, 26K is a bare minimum, and there is a big, massive weekly support over 22 to 20K. Well, that was yesterday's motive. Now that we've rebounced, or that we could be rebouncing, everyone is changing the motive. I just can't stress how dumb this is. That doesn't mean the market can't be bear. I'm just saying that all of the information we have now suggests this is very less likely the actual market's mood. Okay? So first and foremost, these triangle bullshit just makes no sense without a context to work with. Of course, when in a trend, triangle structure generally are broken in the trend's direction. The thing is that now, is this a bear trend? We know it's not. We know it's just the market looking for support into a daily bullish trend. So a daily triangle or H1, H4 triangle would definitely have positively breakout statistics. Of course, we're not, because we're coming from the upside into it. So we try to break down, and we do what we generally do immediately into those cases in which mixed statistical behaviors are more likely than the 70 to 30% chances people are boasting for, which are absolute bullshit because they don't fit the context. We look for the third range boundary. which means we had a speculative area in here. That's a pattern for experienced traders only, and I haven't even yet recorded the video about it. But one way to reverse a market is to try breaking down and failing. You know that a breakout confirmation comes from breaking the trend lines and breaking the structures and breaking through the third range boundary that built this structure. We have so far failed to do such a thing, and we could even build some kind of a triple bottom out of the same 32K area. So we're failing on the third range boundary, we have retraced to the trend channel, but most importantly, we have price acceleration, which I like. Normally a bearish market doesn't accelerate to the upside. So it's still way too early to call that the end of it, but I would say if we keep pushing that way, we'll just invalidate the bearish pressure, and invalidating a bearish breakout only when you are dealing with 2 time frames above supportive areas is a reversal pattern all by itself, meaning that the bears tried, they failed, we're going to take over. That's what it means. So this is a reversal pattern. So as long as we stay on top of yesterday's low point, I think the market's bullish. Let me be real clear, I'm generally much more mixed when it comes to reading the markets, because I rather like to teach you shaded gray areas rather than black or white. But in here, I have a pattern. So as long as we maintain prices over yesterday's bottom, I think we have reasonable probability to have built a market bottom. Yes, because I have a structure suggesting it. In order to assess the probability for these levels to hold, I would like to dig even deeper 2 time frames below to assess the probability to have built a H1 time frame reversal out of the previous third range boundary. This is of course risky stuff because I'm going 1 step below, and in order to study probability of this 1 step below, I'm going 2 steps below again. So this is really like diving 4 time frames below the local time frame chart, the global time frame. Okay, so this is very risky, but I'm just trying to orientate probabilities in here. Okay, now if we go into 15-minute chart, we'll see something really interesting. Okay, I've built the third range boundary areas into the chart in here, 3-minute chart time frame. Trend means we can study this is where the breakout occurs, so all the third range boundary matters to me. The first one is in here, market validated, broken to a 1-to-1 ratio, and somehow managed to push beyond. We failed on a double bottom structure, and another intermediate third range boundary showed up. The thing is that this one retraced right up to where the previous one occurred, failed again, and managed to be broken. So this one validated, it even confirmed because it reversed the context this time. And normally when I have that, I know that normally we should align another third range boundary in here. But the thing is that we had weird trend line structure with this, with an expanding volatility structure. So in here, this is why I've been very cautious with you guys yesterday, telling you don't try to catch the fucking falling knife, because we could definitely have dipped below 30K to build a third aligned third range boundary in here. Reason why I've been very cautious with this. Okay, of course we've built a higher time frame one in here that has been totally squeezed out, though this one wasn't to buy, this one was very dangerous. Okay, but when we finally managed to recover out of yesterday evening, this is where I've made a first call with the experienced guys. We've done that behind closed door because I just didn't want to bring you into these types of trades. Of course, today was a less risky trade, calling for the align third range boundary following it. And now experienced traders know we have a pattern in here. 3 aligned third range boundary, okay, is definitely something great. We have a 1-to-1 exhaustion ratio in between, which means first third range boundary, second is squeezed but failed to a 1-to-1, reversed, retraced, retested, positively validated now. We already validated the pattern as we've reached out to the higher time frames context. So this is good. That doesn't mean the market is going to surge to the upside now. It just means that we have a structure for this bottom to hold. Okay, so right now on this 3-minute, 15-minute chart reference, as long as we maintain prices over 32.4K, we're fine. Of course, for those who take longer time frame trades, the H1 time frame reference, stop losses must be set below yesterday's low point. Okay, a risky area could settle if we dip a toe in between this area again today. Otherwise, we need to reverse this higher time frame context. Okay. So 15-minute chart reference context is the one we want to take down. Okay, what that means is that this is clearly evident. This trend line must be tested. Okay, so now we want to see market testing this trend line to have a full confidence that the market is now on the verge to reverse. Okay, until then, probabilities are definitely to the upside. So let me be real clear. Do we have a bottom? I never know for sure. I will never know. No, nothing's ever 100% guaranteed. Do we have reasonable probabilities that a bottom has been made yesterday out of the daily signals? I think that's a yes. That being said, I wish you guys a pleasant week.